Hi, this is CMP08 and you're with me on G for GST, a YouTube channel exclusively dedicated to GST. We have content ranging from bare basics up to intricate nuances of the GST law. We also have frequent videos coming up about whatever latest changes that are seen under GST. So to get further updates on GST, subscribe to my channel and hit the bell icon. In this video today, I am going to take you through the basic understanding about the different types of returns under GST. It's going to be bare basics so that just anybody, a common man, an entrepreneur, a professional who just started out, anybody can understand and get a glimpse of what types of returns are there under GST and when are they applicable and what do each of these returns signify. So let's get started. The concept of returns under GST saw a magnanimous launch in July 2017, faltered all its way throughout, settled for a middle ground, abridged version of return filing, which was once considered to be only temporary and makeshift, but unfortunately became the only functional modus of return filing in the law. Don't worry, this is not how the video is going to be, just keep watching. We are going to start sequentially through running you through all the returns that are there in GST. All in all, there are 11 returns starting from GSTR1 up to GSTR11. But part of these returns are universal and some part of these returns are only applicable if you engage in those specific peculiar transactions or sectors. Not all returns are universally applicable to everybody. So we will commence sequentially starting with GSTR1. So GSTR1, return of outward supplies, but that's technicality. What is GSTR1? GSTR1 is nothing but a return where you report your sales. What you sold, to whom you sold, where you sold, where was that consumed, at what price did you sell, did you charge any GST, how much did you charge, at what rate did you charge, etc. etc. So this GSTR1 return is going to envisage and cover every single transaction that you ever execute on the sales side of your business. Now, when to file this GSTR1? This GSTR1 return is due on 11th of every month. So once you finish your sale transactions of a given month, you summarize all those sale transactions and report those sale transactions in different columns in different boxes of this particular GSTR1 return. For those taxpayers who are small, that is with aggregate turnover of less than 1.5 crore. So since these taxpayers are small and the government can't burden them with monthly return compliances, for such taxpayers, GSTR1 return can be filed quarterly. So every registered person under GST has to file this GSTR1. Some will file it monthly and some will file it quarterly, but this return has to be filed. A very important thing to be noted about this GSTR1 is that it is a return of reporting. It is a return of disclosure. You don't pay any taxes by the virtue of filing this GSTR1. You only inform the government about the total sales and different types of sales that you have made. Even though this GSTR1 does not result in any cash outflow to you or tax inflow to the government, it is very important that this GSTR1 is filed by all the taxpayers so that the rest of the return process happens smoothly. The next in line is GSTR2 and GSTR3. Non-existent. Launched but never really took off. Nothing really came out of these returns. They literally faced existential crisis and eventually phased out. So there's nothing to discuss about these returns as of now. We will move on to GSTR3B. Singularly, the most crucial return under GST. And when I say crucial, I emphasize this more because this is the return through which government gets money in its kitty. This is a return of tax payment. A registered person has to file this GSTR3B because it is through this GSTR3B that the government gets its money. The sales reporting that we discussed earlier in GSTR1 may happen either monthly or quarterly depending upon the size of your business, but this GSTR3B is a monthly return of tax payment. So this GSTR3B is due on 20th of every month. So while by 11th you report to the government the different types of sales you made and what is the liability arising on your sales through your GSTR1, by 20th this amount of liability, of course net of credit, has to be paid to the government through GSTR3B. So the important point here is that if you delay filing this GSTR3B beyond 20th even by a single day, you're essentially depriving the government of the revenue that it is due to it. The next in line is GSTR4, a return applicable for composition taxpayers. Now, what is composition scheme and how the taxability flows under this scheme is a separate independent concept in itself, which I will not be dwelling on to at this point of time. But for a common and basic understanding, I would say that it's an alternate system of tax payment, which is an option, a relief that has been provided to small taxpayers. So for all those taxpayers or assessees who have opted for composition scheme, it is GSTR4 that is applicable, not GSTR1, not GSTR3B, it is GSTR4. Now it is through this GSTR4 that the assessees give information to the government about the total revenue that they have generated and the tax liability arising on the same. Originally, when GST was introduced and also for the first 2 years, that is FY 17-18 and 18-19, this GSTR4 was a quarterly return. So all the taxpayers were filing their GSTR4 return every quarter. Now, in order to encourage people to come into the ambit of GST and also provide a lot more relief than what it is already, this GSTR4 has been made as a once in a year compliance. So currently, GSTR4 is being filed only once in a year starting from FY 19-20. It is sufficient if you file your GSTR4 once in a year. However, even though the return filing has been made once in a year, the government can't wait for its money for the whole year. It needs money very frequently. So it is for this reason that the tax payment modality of compliance is quarterly. So all the composition taxpayers, they do their business every 3 months. They determine how much is the revenue that they have generated and at the applicable rate of tax, deposit the money to the government. They pay their taxes through a challan called CMP08. So in summary, if you have to say, for composition taxpayers, the return filing is annual through GSTR4, but the tax payment happens every quarter through form CMP08. Now this CMP08 form is due to be filed up to 18th of the month succeeding a given quarter. So for example, let us take the quarter of January, February and March. So once this quarter is over, before 18th of April, the composition taxpayers have to determine what is their tax liability arising and pay it to the government through CMP08. And for the whole year, the background working that has gone into their tax payment and a summary of what are the sales made, how much is the tax, how did they compute, and all of that goes into a reporting in form GSTR4, which is to be filed only once in a year. The next up in line is GSTR5. This I would not call it as a mainstream return, a very uncommon return, because it's not applicable to everybody. GSTR5 is applicable only in case of a non-resident taxable person. Now, who is a non-resident taxable person? So as the name itself suggests, a person who comes into India, he's not a resident or he does not have a place of business here in India. He comes into India quite temporarily, does some business and goes out of it. So such people are called as non-resident taxable persons. So these non-resident taxable persons again will not be filing the GSTR1, 3B, none of it. It is GSTR5 that is applicable to them, and this GSTR5 for a non-resident taxable person is applicable or due to be filed by 10th of the succeeding month. The next return in sequence is GSTR6. So this is not fully mainstream and not very uncommon also. It is quite common. This GSTR6 return is applicable when you have more than one GST registration. There is a completely independent area of study called input service distribution and the manner of distributing the credit, which again I will not be going into because it is a little challenging to wrap your head around that. But since this video is aimed for a common man, I would only say that if you have more than one GST registration, so let us say you have one office in Telangana and another office in AP, or you have one office in Telangana and a factory in Maharashtra. So where either by the virtue of the fact that you are located in two different states or for some other reason, you take more than one GST registration against your single PAN number, then this GSTR6 return gets attracted so that the common credit on common input services can be distributed across all the GST registrations that a person is holding. Now, I do agree that to understand the concept of input service distributor for a layman is a little challenging. So I would only say that the moment you come across two different GST registrations against the same PAN number, immediately it has to strike to you that GSTR6 gets attracted. And once again, this GSTR6 is not a return of tax payment. You don't pay anything through this GSTR6. You only disclose and distribute the common credits. Now, this GSTR6 is due to be filed by 13th of a given month. So once a month is over, so every business which is having more than one GST registration has to identify what are the common credits that have been received on this ISD GST number, and from this ISD GST number the credit has to be distributed to all the registrations that the company or the person is holding through this GSTR6. The next return in line is GSTR7. Yet again, this is not a universal return. It's quite rare and uncommon, and it is applicable only to government department, governmental authorities, government agencies, government companies and public sector undertakings. It is a return which is a consequence of the GST TDS deduction that the government is required to make. So as and when these entities or agencies of the government make the GST TDS deduction, the payment of it happens through GSTR7. Yes, it is a monthly return, but it is not universally applicable to everybody, and it is due on 10th of the succeeding month. The next return in line is GSTR8. As of now, this return is again atypical, quite uncommon, not universally applicable to everybody, but considering the fact that the entire nation is going to become online and is moving towards an online marketplace, the day wouldn't be very far where GSTR8 also becomes a mainstream return. Now, what is this GSTR8? It is applicable only to e-commerce operators. So, to whatever sales that are made through these e-commerce operators, the e-commerce operators undertake a TCS collection. So, the TCS that has been collected by the e-commerce operators on the sales component that has been routed through them is paid to the government through GSTR8. This GSTR8 is also a monthly return and due on 10th of the succeeding month. The next return in line is GSTR9, one of the most dreadful return, and the nation is yet to understand the nuances of this return and wrap its head fully around it. So this GSTR9 return is an annual return, yet again applicable to all types of taxpayers. So every registered person, of course, for the first 2 years, if your turnover is only below 2 crores, you are exempted from filing this return. Once your turnover is more than 2 crores, annual return is a mandate. So every registered person has to file this annual return. So since it is going to be an annual return, it's going to be very lengthy, because it is going to have a summary of every single transaction that you have ever done during the year, whether on your sales side or on your buy side. So the summary of it all goes into this particular GSTR9. Currently, the compliance of only 17-18 has been completed, and for 18-19 the compliance is yet to be made. The next return in sequence is GSTR10, called the final return. So this return is applicable if you have surrendered or cancelled your GST registration. Then in order to get out of the ambit of GST, a return has to be filed, and that is this GSTR10, which is the final return, and this GSTR10 has to be filed within 3 months from the date of cancellation or surrender of the GST registration. The next return in line is GSTR11, a very uncommon atypical return, not at all universally applicable to everybody. So this return is applicable in cases of UIN holders, that is unique identification number. Now certain government bodies and UN bodies get allotted this UIN number instead of the regular GST number. So such UIN holders have to file GSTR11. So I hope by the end of this video you were able to get a glimpse of the basics and understanding of the different types of returns under GST. If you have come this far into the video, we would appreciate and laud your patience and attention, and we sincerely hope that this video gave you a glimpse about what are the basic compliances are involved in a GST scenario. To get more updates on GST, subscribe to my channel and hit the bell icon. Thank you.